What's up, chart assassins? Welcome back to Trading Forex Stories, the channel where we dissect price action, not for the rookies, but for those who live and breathe the charts. If you're not subscribed, you're missing the deep dive. Hit that button. All right, listen up. Forget everything you think you know about single candlestick patterns. The hammer, the shooting star, they're just static pictures in a textbook. If you're still trading those in isolation, you're leaving money on the table. The real edge, the institutional footprint, isn't in the shape of one candle. It's in the movement, the narrative told by the sequence, the velocity, and the context of those candles. Today, we're going beyond the basics. We're tearing apart candlestick movement to understand the psychology and the order flow driving the charts, so you can stop reacting and start anticipating. Think of the market as a battlefield. Each candlestick is a skirmish, but it's the sustained movement, the advance or retreat, that wins the war. For experts like you, the critical shift is from pattern recognition to kinetic analysis. Start with momentum candles. These are your high-range, high-volume bodies that close near their extremes. A strong bullish momentum candle closing at its high isn't just green. It signals sustained buying pressure that continued through the entire session, absorbing all sell-side liquidity. The key is what follows. Does the next candle show hesitation, a small body, a long wick in the opposite direction? That's movement deceleration. A potential shift in the short-term balance of power, often at a key structural level. This brings us to sequencing and structural rejection. Expert traders watch for clusters of candles, 3 or 4 consecutive strong directional candles into a major support or resistance zone. That's movement meeting a wall. The first sign of weakness there, a pin bar, a bearish engulfing. Even a simple doji isn't a signal itself. It's the culmination of a movement. The movement into the level gives the rejection its significance. It represents the failure of a concerted effort by one side to break through, often leading to a sharp reversal as trapped positions are liquidated. Finally, integrate this with order flow context. A beautiful bullish candle movement on low volume near a prior high? That's suspect it lacks conviction. That same movement breaking a consolidation on a clear volume spike. That's institutional participation, a validation of the movement's integrity. Your job is to discern between mere price fluctuation and genuine commitment. Look for candles that translate through key moving averages or volume profile points of control with authority. The close relative to the range, the overlap with previous candles, and the shrinking or expanding ranges tell you if the movement is gaining strength or exhausting itself. It's about reading the fatigue and the force within the candle series, aligning that with your higher time frame structure, and executing only when the story the candles are telling is one of decisive victory, not just a temporary skirmish. So, stop looking at candles as stamps. Start reading them as sentences in a story of momentum and rejection. If this level of analysis is what you're here for, then smash the like button. It helps the algorithm send this to other serious traders. Let me know in the comments what specific candle movement sequence you want us to break down next. Session transitions, auction theory candles, you name it. Subscribe and hit the notification bell so you don't miss our next deep dive into real trading mechanics. Until then, trade smart, trade disciplined. I'll see you on the next one.